I think a lot of folks out there were pleased to see headline go down to 3, core come down just a little bit here. But as you know, the naysayers will always find something to nitpick over. Did you find anything?
I couldn't find anything. There is nothing not to like in this report. When I go across the 3 major categories, the biggest one is shelter. We saw shelter prices peak at 80 basis point month-on-month inflation, say 4 to 6 months ago. We were down to 45 basis points today. I think we're going to be closer to 30 by the end of the year. Second big category, all other services other than shelter, 12 basis point month-on-month increase in prices. That's half of last month. Again, well below a 2% annualized run rate. And then the third category, core goods, was basically down on the margin, down about 7 basis points month-on-month. All of that was used cars. Ex-used cars, flat prices there. So typically I can find something to say other than that. On the other hand, I can't find anything to not like.
Well, we know, Ron, on the other hand, is going to be dominating, of course, the Fed discussion when they meet in a couple of weeks down in Washington. There's still a big debate here, not only just about whether we get another 25 basis points in rate hikes, but whether there needs to be more coming after that. Do you think there's a strong enough case to be made now, based on the economic data that we have publicly, that they can maybe continue pausing?
Well, I do think the July 26 rate hike is pretty much a done deal. I think the Fed's made it clear they're going to do that. And then I think pausing is the right call, but I think that will be the last hike. Now, keep in mind, we still have quantitative tightening. So we're still running off the balance sheet $95 billion a month, $800 billion so far. We still have that long and variable lag from the 500 basis points of tightening so far. So I think the Fed will be wise to basically stop after the July hike, see what happens. The one main reason to think there might be another hike thereafter, and I thought that until this morning, is the labor market is still so strong. I mean, the data last week, 278,000 jobs per month for the first 6 months of this year. The last time we had that strong jobs growth before the pandemic was 1999. And this is after all of that tightening. So it's still a pretty strong economy, but the inflation story looks a lot better.
Well, that's what I want to talk about, sort of the relationship between what we're seeing in the CPI figures and what we're seeing in the labor market. Because you have the Bill Dudley camp, of course, which is saying you have to cool the labor market to get inflation where it needs to be. And then the other side would say, look at how far we've come on inflation. At the same time, you have a very strong labor market. Where do you fall on that debate? Do we need to really take the edge off the labor market here, or can we have it both ways where inflation's coming down naturally?
I do think the labor market can't be as tight as it is today and have 2% inflation on a sustained basis. We do have wage growth last month was 40 basis points. The year-on-year is running around 4.5%. That just is not consistent with 2% inflation. But the trajectory is towards weaker job growth. I quoted the first 6 months. Last month was 209,000, not 278. And if I look at the quit rate, which to me is kind of an acid test of, are there really better jobs out there? We peaked at 3% of all workers quitting in a given month last year. We got down to 2.4% in May. Or in April, we're at 2.6% in May. You know, if we continue to see the quit rate go down, the job openings rate go down, I think we can actually have a pretty good story here. Now, let's make no mistake. I think we're likely to avoid a recession. My base case is 65% chance no recession in the U.S.
Yeah.
But even if we avoid it, it's going to be slow growth. So maybe that's the other lens to look at is you do have to kind of run a bit cooler for a while to make sure inflation's under control for the longer term. But I think, again, good trajectory so far.